Okay, welcome to the
Yeah.
Catchy Study Sesh. It's December 27th, 2023, and we're gonna go over what happened today on Nasdaq. So, today we had a seek and destroy market profile on both ES and NQ, but we had more of a run on NQ than we did on ES. So, we got the right market right today. So, looking at the higher time frames, we see we mitigated this 1 hour for a value gap. So that would be our higher time frame PD array. So if we paid attention to the market maker models, if we got a 1 hour time frame PD array, so that would be our higher time frame. Our market maker buy model should be forming on the 5 minute time frame. So we see we had our original consolidation up here. So our original consolidation would be here, right? And because of that, we had a manipulation move to the upside after. Um, so consolidation, manipulation took out the high. Then we had our sell portion of the curve. So our sell portion of the model, right? Dropped down to mitigate this 1 hour fair value gap. After we mitigated that, that created our smart money reversal right here. It's created our low, taking out all this liquidity, our Asian low, London low, all of that, creating our smart money reversal, which would be right here. This portion, this would be our smart money reversal right here. And now we had our smart money reversal on the 5 minute time frame. We can push up, and we can see a retracement back down, not one time, but again a second time to tap into some type of setup here. So if we can try to form a setup here, so you can see the market came down right here. We formed a short-term low here, tapping into what I seem to be an order block right here. So that's what I seem to be. So that'll be our OB, our order block, bullish order block right here. And tapped into that order block right here, respecting mean threshold of it, which would be midpoint of it, rejecting higher to later take out this high. So our market maker model, right, it would look something like this. Hold on, right here. So our market maker model looks something like this. We got our sell side of the curve, and then we got our buy side of the curve, which should be up here, and then eventually here, right? So we can just put it like this. This would be our buy side of the curve, basically, right here.
Hey, Bono,
Yo, what's up?
am I supposed to be just like trying to find what you're talking about?
So, whenever I say higher time frame mitigations, right?
Mm.
You want to be looking at the higher time frames, like the hourly, the 4 hour, the daily,
Yeah.
the weekly, maybe even the 15 minute. You could use the 15 minute as a higher time frame mitigation as well. You know what I mean?
Mm.
But once
Yeah.
you get
No,
to
no,
the
I'm just saying that because it's called. Were you gonna share your screen or no?
oh yeah yeah yeah, my fault my fault.
Okay. No, 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 it's good. It's good.
My fault my fault. I forgot to share my screen. Okay, let's take a look at that. Okay, you can see now, yeah.
Right, John. There you go.
Okay,
Let's do
so
this.
this would it be looking like. So we got our higher time frame mitigation, which is gonna be on the 1 hour time frame here.
Mm-hmm.
Tapping into this 1 hour for value gap, coming down, pushing back up. Our setup is gonna be on the 5 minute time frame. Okay. We could also use this
Okay.
4 hour for value gap as well. Right here. Could also use that. This 4 hour one as well. But let's pay attention to the 1 hour. Okay.
Roger.
Our setup would be on the 5 minute time frame, right? So we're gonna have our smart money reversal down here, original consolidation. This is our sell portion of the model. Sell portion of the
Mm.
market maker buy model. Coming up now, we have our smart money reversal right here, which at the same time on the higher time frames tapped into this 1 hour fair value gap. Market comes up, comes back down, tapped into this order block here, respects mean threshold, have a little run back up to take out this high. So we entered right on the order block, targeted the high right there. What do we have?
Mm-hmm.
About a 200 tick move right there, about 50 handles. Once we took out this liquidity here, market comes back down, and we have a seek and destroy market profile, but they still run with the market maker buy model. Okay, so original
This you can destroy
consolidation.
run together with the buy.
What was that? What was that?
It works together?
Yes. So
Mm.
market maker models is what the market does pretty much every day, just in
Yeah.
different senses, if you know what that means. So like, um, on one hand, the market may be very choppy, but still be in
Hmm.
the market maker models. The market can be super have like a lot of runs, but still be in the market maker model. Just depends, right? So today we had a market
I,
maker buy model, but with the market maker
mm.
buy model, it was in the afternoon that we get the buy portion of the model, and it was on the higher
What?
time frames. The market maker sell model portion of the move, so we got the sell portion of the model, so the sell side of the curve. We had the run in the AM sesh to the downside to take out that 1 hour fair value gap. Not take it out, but mitigate it, yeah. So the 1 hour fair value gap was the drawn liquidity for the day, basically, yeah. So um, you should have anticipated that once we got this um, higher time frame liquidity sweep on that long term high, yeah. So what we could have used would have been like this, okay. So on the lower time frames, we got our higher time frame sweep right here. This would have been our higher time frame sweep right here. And this is what ICT did today as well. So we got our high time frame sweep right here. Right there. So we got our high time frame sweep right there. Now what we want to do is drop down to our lower time frames. Now we want to get our lower time frame sweep, right? So targeting this high to get swept. Letting it run. Boom, we got our lower time frame sweeps. Remember, higher time frame to lower time frame turtle sweep, right? Or liquidity sweep basically, right? So we got our higher time frame sweep, got our lower time frame sweep. That's high probability number one. So what we could have done is we could have entered on the turtle soup or the stop hunt as a scaled in first. Yeah. So we're doing 5 scales maximum. Start off with 3, right?
Hmm.
So we could have entered on that turtle soup. But let's be realistic. I don't enter on those just like that. I enter on a setup, right? So if
Yeah.
we're on the 1 minute time frame, we got a inverse fair value gap here. Market taps into this order block. Now that's a setup. Because number one, we got what? Higher time frame to lower time frame sweep. Boom, number two, we were rejecting this inverse to tap back into something that got pushed away from, which was this buy side. So we can enter right here on this order block, have our stops above the high, targeting maybe the closing price from yesterday. Market trades
Hmm.
back down, pushes past this inverse now. Yeah, so pushes past that inverse, pushing more past, creating a breakaway gap here, which we do not want to see filled. Also creating a measuring gap here, hitting TP, basically. So that's how our first trade would have gone. But if we're on the buy portion of the model, you see how we tapped into this 1 hour fair value gap, creating our smart money reversal, coming back down, creating our order block right there. That would be our order block. Tap into the order block, buy here, stops below the low, TP at the measuring gap because it didn't get tapped into yet, right? And then if we scale it in using another con here, oh, was that not the fucking order block? That might have not been the order block. Oh, it was. No, this was the order block. My fault. Anyways, so yeah, market coming back up, taking out this buy side, leaving behind a fractal here. See if we get a tap back into it. We do. Scale in right here on this fair value gap right here. Market trading higher. And then eventually hitting TP right there. So I scaled in on 2 cons. One on this order block here. Order block should have been here because we tapped back into the order block down here. And then we scaled in on this fair value gap, which we did have disrespect, but then eventually came back up. So OG entry should have been this order block right here. But yeah, that's how the buy portion of the model would have went during the AM sesh. During the PM sesh, I don't want to pay attention to Yeah, that's how it would have
Yeah,
went today. Um,
that's not our session, so yeah.
yeah, you wanna pretty much dedicate yourself to one session,
Mhm.
one kill zone, one session,
Yes,
so you
sir.
get consistency. So yeah, that's how today pretty much would have went. We had a market maker buy model, but during the AM session we were on the sell side of the curve. So um, could have took a short on the 1 minute time frame after we did see an obvious wick close on the 5 minute time frame of this long
Mhm.
term high. After we got that long term high close, we could have gone to the 1 minute time frame. Oh fuck. We could have gone to the 1 minute time frame and identified that lower time frame sweep, which is higher probability. And it's surprising because this is one of the setups that I always do. Yeah, doing the higher time frame sweep to lower time frame sweep, right? So I do that pretty often. So
Mhm.
having that, could have entered on that order block. Also could have entered on the turtle soup. Also, once we got disrespect of this um order block, we could have seen that we were gonna be bearish because of that. So could have seen that coming. Also could have possibly entered on the breaker. No, we could not. Okay. Anyways, but that's pretty much how today would have went. Oh, we could have traded this inverse. But yeah, sell portion of the model would have been looking like that. Um,
Mhm.